Good morning. We're looking at the S&P 500. We're updating people, our other traders, people from around the world and whatnot. This is a complete 60-minute chart of that S&P 500. Back here on 3 of 7, we had our first minor pullback here, which was exactly when we opened up here on the 60-minute bar that day. That was 1878. The high was 1883. And on a 60-minute level, we had made the highs, and then we kind of had, low volume in these days, and we hit the low there, 1871. What I want to make clear, that's where we ended up coming down on 310 to the low of 1867. And at that point in time, we were buying the 1830 calendar month of April calendar. That's an April regular monthly expiration, not a weekly. We can clearly see here that this 1830 put option on 3.6 and 3.7 was our entry was on at 1850, but our entry was over here. So this is part of the overall trend because we went from the open of this contract. They opened it at 15. They ran it to 1915. Our entry was 18 and a half. And then they went from this date on 3/11. They went up to $30.10. They opened at, here's the key. They opened at 26.9. They go up to 30.42. And they had a low of this contract. Once again, the 1830 put dropped to $25. So this was the bottoming when we were putting in the top over here. This top of the S&P 500 is the bottom of the 18th. So when we were putting that top right in here and we came up and we tested not quite the high on a 60-minute level, that's when these contracts, when we made that high on 311, this was the low of the calls or the put side, and the calls were at their highs 1850, 311. Here 311, we put in the high, we reversed on that calendar day on the 60-minute on 312 now, which is right over here. We had made a low in the S&P at 1854. They closed that 60-minute bar on 1857 now. And here, when we put the bottom in here, here is the date. It's going to be right here. This is 3.7, but look at right here. This is what we're focusing on right now. The 3.11, the 3.12, the 3.13, and the 3.14, which was Friday's close in trading this 1830 put that was out of the money, and it is making money. They were totally deflated as we were putting the lows in the S&P. Right here is that 12. Here's the 11th. Here is the 12th. Here is the 13th. Here is the 14th. And that was the 60-minute 5-day calendar range. You can see here that on the daily ranges that these put options of the 1830 went up 4 days. We're in a closing weekend right here. We rang the cash register right there, and the close was 30.10. The low was 25. That was the daily low, and it all is a reflection right here of that pivot point of being resistance and then breaking down to 1841 that has the longer term support level with an 1883 high down to what? In 1841, 314, 2014. Let it be known, because I'm going to blow up this part of the 60-minute chart. I'm going to let it be known right here and right now that reversal from the high of 311 down to the low was buying here on the low of the 11th up through that same calendar week. We got a 4-day run, in the put option, which was 1830, which was 50 points below the strike price of the highs that we were doing over here at 1883, with the original reversal right here and right now on 3/11 of 2014. We are at a low. We cashed them in, and here's what I'm going to show you now. Here's what I'm going to show you on the index. Here we go. Now, up here is a March 14th that we're going to watch versus the April. And we can see that it made a move too off of its lows. And these expire starting tomorrow, Monday, on 3/17. This is a monthly expiration on the S&P. That was the 1880 put, and we're going to keep a very close eye as to what this S&P will open up higher tomorrow or not. You got the Russian deal in there. You got a 2-day FOMC meeting with the new chairwoman. You've got all kinds of economic data that's coming out. You got the first triple witch of the year that's going to be on that expiration. The monthly and the quarterlies, everything is expiring. The options, the equities, everything's going to have an extreme volatility. And here's what we're going to show you right now. Here we go. We have an S&P 500 1870 put chart right before you and the rest of the world. How we had bought those and where their bottoms were is the following. I will show you now. It's the same relevancy as to what lows were put in on what dates they were put in. Now, this premium started over here on 3.6. It went to a bottom, but here, that premium broke out from that low over here, and that's on 3.6. But 3.7 is right here, just like on the other one. We said they opened at 28.50, the high $31, and that low was 26.50, and the close on the contract that day on a daily was 29.50. That was on 3.7. Now, let's just take a look here at 3.11 once again, where the contract was at 27.90 and we bought. The high was 31.50, and once again we had that calendar month put option 1870. You can clearly see here that on 3/13/2014 these put options made a high of an intraday high of $45.20. We sold into it here. Yes, they opened at 43 on 3/14. Friday's close. They hit a high of 48.95. But let me tell you something. The low was $40 and the close was 48.95. So by getting the lower end of that bid and working with the overall S&P daily chart as we have done, I am going to do the following. These put options, the weekly that expires now with the triple witch, there's going to be a tremendous amount of volatility. So I'm going to bring up the trend tool and we're going to go through a couple of areas on the 60-minute chart. And what we're going to do is we're going to go back over here to 3.4. This is when from 3.4 on a monthly March 3.4, we went up on narrow range. We got to the high end of the 60-minute bar because we did. And then what ended up happening right here is we really couldn't go any higher on the 60-minute level, except for we started to go down on lower volume and things like that. Now, having said that, I'm going to show you the following. Now, we've been covering this S&P that broke below the 10-day and the 20-day simple moving average to a major support level, which was ultimately the resistance level when we had broke up from those lows in the S&P. And at the time, just so everybody knows, once again, that the bottom here, the bottom over here was 1739. We got down as low as 1743, but check it out, 1737. And on that daily level, we started that major breakout and we went up and tested this resistance on a daily level for several days, and we finally made the high on a very narrow range consolidation with the daily breakdown below those key moving averages, simple moving averages. And what we are going to say, that the volatility is here to stay. Any upside we will continue And I repeat, we will continue right here on the S&P 500 calls and puts with the index based on support, based on resistance, based on one of the most volatile weeks of this new calendar 2014 starts tomorrow morning and ends on Friday with that triple witch with FOMC 2-day meeting. We're going to have a lot of leading economic indicators that are going to be released as well. And the volatility is going to pick up substantially as we are in one of the best months for stocks. Go to the website. We did the 5-year review. Yes, we did. Go do your homework. It's on Stock Market Funding right now. Type in the S&P 500 and you will be able to see what kind of ranges that we were in and how to trade these index put options. And it's live and it's here. It's 10:50 a.m. 3/16/2014. You got the Russians acting up. You got a lot of worldwide events. The volatility will be way above the normal level. And let me tell you something right now. If you're just a regular public individual, I would put your seatbelt on and I would stay in the passenger side. Do not get in the driver's side because it's going to whipsaw you around and you're going to get taken to the woodshed this next coming week with the kind of volatility we're going to have.